This is the website, and I want to direct you to this first so that, and jot down the address when you get home to take a look at this, because this is where all of the stories we published last year, and as we go forward, others will be added to give you all of the overview of what's happened in the insurance market. But if you scroll down to the bottom of this page, you can actually look up information on your own insurer and some 100 others in Florida, find out their financial status, the health of their capital reserves, how much risk they've taken on, and how leveraged they are. And it's the only place in the state that you can go to get that kind of information on your carrier, to get a measure for yourself of how risky your own insurer is and how your insurer is looking at your risk. You can even enter information about your own home and get information on what the hurricane models that the insurers use predict as your average annual yearly loss. Now, that doesn't mean every year you're going to have that loss. That means that in 100 years, on average, you would have lost $500 a year. You know, you count on your house being blown away once every 30 if you're in a hurricane zone. But it gives you a metric of what the insurance company thinks your risk is, and then you can compare that to the bill that you're receiving and get an idea of what you're paying for. To understand the problem that our lawmakers are facing and trying to deal with, you have to understand that the dramatic change that has taken place in Florida's insurance market since starting Hurricane Andrew, and especially since the 2004-05 hurricanes. The market has shifted, and this is a slide that was shared with me from a CEO of one of our Florida insurers, Security First. The market has shifted from national carriers who were represented by the green bar, and you see that shrinking dramatically, and other national companies, that's the white bar, that's also shrunk dramatically, and seen a dramatic growth in companies that are only doing business in Florida. They call them the Florida specialists, and that's the red and the dark blue. The dark blue were able to grow with the benefit of low interest loans from the state itself. So we have helped to grow that share of that market. These are the carriers that in our series we found were most likely to be putting homeowners at risk. These are the carriers that are having the hardest time surviving in the current Florida market. They operate typically on very thin margins. They tend to ship the hurricane risk offshore to other people that they buy the equivalent of insurance from, called reinsurers. So they are the ones that really most of the debate is often about where the danger is coming from in Florida. And everyone talks generally about how do we get back to strong companies with strong national reserves that have the ability to withstand hurricanes here, tornadoes in the Midwest, and other damage elsewhere in the U.S. as a national pool. As the national carriers have pulled out of Florida, the new businessmen who have come in are, in some cases, people with very little insurance experience, and these guys are a classic example. You can see so much in this picture from the body language of these two individuals. These are the CEO and his number two guy of what was Northern Capital Insurance. Their former occupation was running a Miami security guard company, and they still look every bit the security guards. They worked on a business model that has become common in Florida and is unique to this state. It has not taken off in other coastal hurricane states the way it has here, and that's to create a fronting company. That's the small company that your policy name is on. Sell the hurricane risk or buy it to move it offshore to the offshore reinsurers, and then also create a daisy chain of in-house firms that bill each other for services, management fees, claims handling, policy processing, even agent sales. And there's a overhead and sometimes an extra CEO salary every step of the way. This practice puts most of the finances of these companies out of sight or control of regulators between the affiliated costs and the reinsurance costs. So the public portion of the premium that regulators actually can deal with is a small percentage of what you're paying. It also allows the diversion of money to the point that companies appear to be losing money and need rate hikes when their affiliates are enjoying profits, and those profits sometimes are not seen by regulators. The Office of Insurance Regulation argues that it can look into the books of the affiliates, but there is a state exemption in Florida that prohibits regulators from auditing the books of these sideline companies. So I have had some financial experts suggest that these companies are set up to be essentially disposable, that they're not here for the long run, that if there's a 10-year big storm, they'll walk. And some of the companies, though, that are working on this business model don't have that point of view. It's difficult for the consumer to know which is which, but and this is where I tell people that your best friend in this whole dilemma is your agent. Your agents generally have an understanding of what the personality and the characteristics of that insurance company are and what kind of company you're dealing with. So if they're a local company, that does not mean, or a Florida-only company, that does not mean it's bad, does not mean you're necessarily at risk, but it is worth inquiring a little bit more about who you're working with. The argument that Florida is a unprofitable and inhospitable place for insurance companies begs also another issue, though, and that's the fact that we continue as consumers to pay much more in premiums than have been returned to consumers in claims checks. Hurricanes, house fires, leaky water pipes, everything combined. And we've had hurricanes before 04 and 05. I don't remember it off the moment how many storms total has been paid, but by the end of 2009, it was a $7 billion difference between what homeowners had paid into the system and what the system had given back. Insurance companies will have a much different view of this picture because they have costs that aren't included, such as their reinsurance costs. But from a pure consumer perspective, it's not been money in savings account for a rainy day kind of process. In fact, for the insurance perspective, this is the number of companies on the right that say they lost money last year, storm-free year. We had also in that year $718 million in rate hikes approved by state regulators. 41 insurers claimed $600 million in losses. And the number of people insured by a carrier now at risk increased by 30%. So we've continued to lose ground. And I think everyone, both sides of the issue of how to solve this will agree Florida's in a deteriorating situation. And the issue is how to address that. This one is based on how much capital they have in hand. You see a fair number of dots to the left on the red. And that's the market looked that way last year. And I updated this this week to reflect the most current financial data for companies. So please do check that out and see where your company's at. When you click on a company, you'll get detailed information of the 4 different indicators that we've selected, and scroll down. There'll be more about where they're writing policies, where they're dropping policies, and and links to their own website too if you want to get more information. Florida's system is possible because it's highly profitable for one segment of society, and these are the reinsurers that I mentioned earlier, the offshore reinsurance industry by and large, whose rates are unregulated, whose business practices are driven by their pursuit of what they I'm sorry, I'll say profit. They say it's the return on equity. In other words, they need to return money to the investors who are willing to place a bet on this casino. Florida has the greatest concentration of catastrophe risk in the world. And Florida is also the largest profit center for the global reinsurance industry. I think 1/10 of the profit globally for the reinsurance industry comes from Florida. So we are a big player for this industry and very important to it. The biggest chunk of Florida's reinsurance, this is based on, this is from 2004 through I think 2009, came from Bermuda. Almost $5 billion in Florida premium went to Bermuda. Lloyd's of London was second, and then other amounts to reinsurers elsewhere. The Bermuda reinsurers, though, are the predominant provider of hurricane protection to homeowners in Florida, especially for the smaller storms, the ground up, as they say, losses. So it's a very close relationship. It's not one that's very visible. You don't see on your bill, who is actually backing you. But it's when these guys pay that your insurance company can pay you. And if your insurance company doesn't have a lot of capital, it's going to run into cash flow problems unless its reinsurers are paying it. So there's a chain of events that has to occur for you to get your check. And only a limited amount of money that your own carrier has on hand to tide them through any hiccups in that chain. Excuse me. The reinsurers price their product more like a security than an insurance thing. In other words, it's priced more on supply and demand than on the risk itself. And we found that the cost can, on average, be 5 times more than the expected loss. And that is the price of doing business. But when it comes to a homeowner to understand what's happening there, this is often the most difficult part to swallow. This is a house a block away from here. People talk about the beach mansion bailout in Florida, but most of the homes that we're talking about are very modest, older structures like this house here. And this masonry block home has a value of the building itself of $82,000. That's probably been reduced by the assessor, so the insurance company may be looking at a higher value. But $82,500 plugged into the computer model that the insurance industry uses to calculate risk comes up with an average yearly expected loss of $307. I doubt very much the hurricane premium on that house is $300 and some dollars. So it's an example of then how magnified the cost of reinsurance, what that does to the bill that homeowners are paying. Now, your insurance company, if it didn't buy reinsurance or if bought less reinsurance, would still be needing to charge more than the average yearly loss, but they would be able to hang on to that money in their own surplus in the state and save it up for future storms until they would become more and more stable. There's a heavy disadvantage to doing that because federal tax law in the United States penalizes insurance companies for building up catastrophe reserves. I think we're the only developed nation in the world that still does that. And for a number of years, our insurance commissioner had argued that Florida should be beseeching Congress to change tax law and permit, the buildup of reserves. The current situation is, and I get these sent in from agents in the area, is notices to agents from insurance companies like this. This is a company telling agents that they're going to reduce their exposure in Florida. Here's another one. Some of them are citing the new computer models that have come out this year that extend hurricane risk inland, so you no longer can live in Orlando and say that you're not at risk of hurricane damage. From the point of view of the insurance companies, now you are. And we're seeing dramatic rate hikes being forecast in some of those counties now to deal with that, and continued pullout of the insurance industry in much of Florida. You add sinkholes to that, which for these insurance companies with small operating margins are almost a death sentence in some cases. They have been dumping policies in sinkhole areas like crazy the last year. If you look where the yellow bar is, this is Hernando County. Do I have that right, Senator? Hernando. This one here? Well, anyway, Hernando, Pasco, Hillsborough saw a tremendous jump in the number of policies taken out of the private market and put into the public market, which means that Floridians as a whole, as taxpayers, have some risk of helping support that fund. And you see now, for the first time, Hernando County has got the greatest percentage of its exposure in citizens in the public pool. That Dade is now second, and Dade for so long was the hurricane hotspot. So the addition of sinkhole policies into this is loading up citizens and creating problems. for the carrier. The question is how to get insurers back into that, and they're walking away, I think, even without legislation that would allow them to drop it. And the bigger question, though, is how many homeowners have walked away and left the system.